Good afternoon and welcome to BizTech Asia's Midday Market Watch on what is already the 7th of March 2024. With me today co-hosting is Samantha Voon and I am Jeffrey Halley. Our guest today is the inimitable David Kuo, the founder of The Smart Investor in Singapore, who is returning from a long break. David, great to see you again.
Hello, Jeff. Hello, Samantha. 7th of March, we'll be talking about Christmas very soon, won't we, yeah?
Seems to be rolling around that fast, doesn't it? Yeah.
I know. We've got the American elections to look forward to first, and then after that, who knows? Right.
You've just depressed me there, but let's see if we can find some more good news from stock markets around Asia today. So let's just take a look at what markets are doing in the region. I don't think I'm going to get my wish, I'm afraid. The Nikkei 225 in Japan is down at 0.9%. Shanghai is down at 0.26%, with the Hang Seng down 0.61% in Hong Kong. Down in Australia, the ASX 200 is in positive territory, up 0.34%, with South Korea's Kospi also climbing 0.15%. In Singapore, the STI has fallen by 0.22%, and the Kuala Lumpur KLSE is up 0.15%. Now, David, I know you hate talking about short-term price movements, but I do have to ask you what your opinion today is of today's market movements.
I think everybody's still trying to digest what Jerome Powell said yesterday in front of Congress. But it's gratifying to see my favorite market at the moment, the KLCI, is actually up, Jeff. That pleases me no end. But we'll be talking about Malaysia a bit shortly. So
Absolutely.
As far as the markets are concerned, I think people are just trying to sort of figure out what exactly is going on with interest rates. And part of the clue actually comes from having a look at the US dollar. The US dollar is down. And I think, that is primarily because they think that maybe American interest rates have kind of peaked at the moment. But that is going to be something that we're going to have to sort of figure out. You said, the year is rolling along quite quickly, but we're still only in March. So we still have another 9 months to go before the end of the year. And we're going to have to sort of see what happens over these next 9 months, because a lot can happen in the markets, Jeff.
We won't be bored in 2024. I'll hand it over to Samantha.
All right. So, David, while Donald Trump's Super Tuesday win captured the headlines overnight, the Federal Reserve Jerome Powell had important things to say, right? So could you walk us through your key takeaways from Mr. Powell's testimony?
I think he was just paraphrasing, we are data dependent, but he can't say we are data dependent anymore because people just yawn when he says that. So what he's suggesting at the moment is that they're going to be looking at the data very carefully, data dependent. And as long as the data would suggest that inflation is probably on its way down, data dependent again, then they will consider reducing interest rates. What he said was that in this particular interest rate cycle, it's very likely that interest rates have peaked. And I think that is what the foreign exchange markets were taking away with them, that there were going to be no more interest rate hikes at the moment. Although there are some analysts out there, some outliers who think that maybe interest rates could actually sort of go up this year if inflation is persistent. But I think the general consensus is that interest rates are unlikely to go up any further from here, and maybe we might just sort of get that rate cut, which is something that Jerome Powell hinted at in Congress.
And that might also unfreeze the property market there as well. Nobody wants to sell their house in the US at the moment because it means that they have to reset their 30-year mortgages to current market rates.
I know it's a stupid system, isn't it? But you would have thought you'd be able to carry over your mortgage from one property to another, which I think is something that you can do in the UK, because, the property, your loan should actually follow you as a person rather than to follow the property. And when you sell it, you have to renegotiate. It's ludicrous.
Let's turn to a place that's dear to your heart, David, Malaysia. The Malaysian stock market is up 6% for the year to date, which is a good performance. Why are stocks rising in Malaysia? Because it has been much maligned over the last few years. And should Malaysia be back on investors' radar, or should it never have left?
That's an interesting point because I've been investing in Malaysia probably for the better part of three and a half, 4 years now. And the portfolio that I built nearly 4 years ago has been underwater apart from two occasions. The first one was during the pandemic. Ironically, it was because many of the people who were locked down in Malaysia couldn't go out, couldn't have any kind of entertainment. So they went to the stock market and they started playing around with shares. So that drove up share prices. The other thing that drove up share prices during the pandemic was because of the rubber glove makers. I mean, these protective
Mm.
and equipment makers, these PPE makers, were
Mm.
in huge demand, and it drove up the price of one of my stocks, Top Glove, to astronomical levels, and it just lifted the entire portfolio. After that, the portfolio went back down, and it was underwater again. Just recently, it's actually sort of started to turn positive, and I'm getting a total return now, which is in the green rather than in the red, which is quite, on the one hand, it's quite reassuring that I didn't make a mistake investing in Malaysia 4.5 years ago or 4 years ago. But it just means that whatever dividends I'm getting now, I'm going to have to pay more for them when I actually reinvest those dividends into more shares. But the question is, why is Malaysia at the moment bucking the market, bucking the trend in the rest of Southeast Asia? We find that many markets in Asia aren't doing particularly well, and yet Malaysia is. Today is a good example. Every
Mm.
time I look at the Asian markets, Singapore could be down, Philippines could be down, Thailand could be down, Malaysia is up. Why is that? And I think it's generally because confidence is returning now to the administration in Malaysia.
Mm.
People do have confidence that Anwar Ibrahim, the prime minister, is doing the right things. And they look at whether or not the country can grow with the help of Bank Negara, the central bank. They're keeping interest rates low. Inflation is relatively low. And yet at the same time, we are getting consumer spending, which is driving economic growth, government spending, which is driving economic growth. We're also getting foreign direct investments into Malaysia, which is driving economic growth. And then finally, net exports. They are exporting more than they import, and that's driving economic growth. So I think everything is aligned at the moment. I think Anwar Ibrahim has got all his ducks in a line, and I think that this could bode well for Malaysia. That's my take.
Excellent.
All right, so let's take a look at China's NPC meeting. So Super Tuesday also took China's NPC meeting to the headlines. What are your key takeaways? And is the recent rally an opportunity or is it a value trap for investors, David?
Well, people have been talking about China being a value trap for a while. And when you listen to what was going on in the NPC, I think a lot of people, when they came out and said that China's economy could grow 5% this year, many people were sniggering behind their hands, and they thought, really? Seriously? You think you can grow 5%? I mean, what are the drivers of your economic growth? But they're adamant. They say they're going to be able to grow 5%. Last year they said they could grow 5.2, 5.3%, and sure enough they did. Whether you believe those numbers or not is a different matter altogether. And
Mm.
as an investor, yes, I mean, I take the government data, I look at it, and I try and pass it as best as I can. But at the same time, I listen to what corporations are telling me, companies, real companies that are operating in China, and listen to what they have to say about what is going on with their business in China. And just recently, we heard that Apple sales are down by about a quarter in China. I mean, that doesn't sort of tell me that the economy or the households are in fine fettle right now. Tesla is not doing particularly well. So I'm waiting for other companies to come out. I want to hear from Starbucks. I want to hear from Yum Brands that owns things like Kentucky Fried Chicken. I want to hear from McDonald's. I want to hear how they are doing in China. And they will probably give me a better picture. And when I put all those numbers together, it will probably tell me more about what is going on in China and whether or not that 5% that they think will happen is real. But your other point is China a value trap? Chinese shares are cheap, Samantha. They are ridiculously cheap. I mean, the market on a whole is on a price to earnings ratio of about 12.
Mm.
And so any share that is actually trading below 12, about two-thirds of that, say a PE of 8, is cheap. And so therefore a value investor will say, yes, that's cheap. If your dividend yield is about the market average, which is around 3 or 4%, that's a good investment. If you have no debt on your books, which then rules out all the property developers, by the way, because they have massive debts on their book. But if you're a company that's got no debt on its book, then that is actually a value share. And then finally, if you're price to book, if your valuation is low, then it is a value share. Now, all those people who say that China is a value trap, what they're actually saying is, when will the value be outed? Now, it's a bit like the two of you. I mean, Jeff and Samantha, you might be great singers. I mean, Samantha, you could be the next Taylor Swift. Jeff, you could be, the next Tom Jones, right? You are good singers. You are good singers, right? But until somebody finds you and says, here is a gem, here is a good singer, and I'm prepared to put money behind Samantha, I'm prepared to put money behind Jeff, you will always be underwater.
That's right.
Your only audience will be your shower curtain, right? Because that is the only place that you're going to be able to sing. But if somebody discovers you, then that's fine. And I think the same goes on with China. A value share is a value share. There is no getting around it. The trap part is, when will the value be outed? What catalyst is going to actually say, yeah, it's time to actually buy, and then suddenly the value be outed, and then the PE ratio will go from 8 to 12, the dividend yield will rise, the price to book will increase from half to 1, and then you will make money. But the question is, do you have the patience, right? And value investors, there are lots of armchair value investors, a lot of pseudo value investors. What they lack is patience. But if you are a true value investor, you need the patience of a corpse, right? You need to actually wait that long. And let's hope it doesn't take that long to actually sort of see the value outed in China.
Excellent answer there, David, as ever. I just wanted to, I was almost running around doing a Tom Jones lyric. I think I'll spare you and the audience that one.
No. Next time, my Delilah. Yeah, I think you should start the show with that.
Well, it's not unusual for anyone to say that. And anyone of a age will probably not understand what we're laughing about, but those of a certain age will. David,
Samantha's got a question mark on her face. What are they saying?
Exactly. Well, my girls have never even heard of Fleetwood Mac and Guns N' Roses. So Bruce Springsteen, one of my youngest, has never heard of Bruce Springsteen, but that's the problem I will have to deal with.
Okay, you're failing.
David, it's been wonderful having you back on the show again after a long break. Please don't be a stranger again for so long.
No, I definitely will be around next week.
Excellent. We've been speaking to David Kuo, founder of The Smart Investor in Singapore, on BizTech Asia's Midday Market Watch. I'm Jeffrey Halley.
And I'm Samantha Voon.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. You can also see it with our syndication partners, TV stations, radio stations, and websites. Thanks so much for tuning in today.